Good evening, everyone. I see there's a lot of people waiting, about over 20 people waiting for the live stream to start. So I've started a few minutes earlier. Hi, Crypto Shrugged Author. Good evening. Hi, John. Lord Humongous is here, one of my moderators. Loves the smell of napalm in the morning. Sash Media. Kudlow is just like Kramer. He is. He's like a cheerleader for the stock market. I've got, just tilt this over. I got my End of Fed T-shirt. This is not the one that I sell in my store. It's one I've had for many years. And Billy's here as well. Billy, come on, boy. Say hello to everyone. There he is. Billy says hi. Billy making friends on the walks. Yeah, he does. He's kind of funny with other dogs, but he's very friendly with people. And the Fed, that's right. Wolf Billy, let's see here. Yeah, the headline of my live stream, of course, is about Larry Kudlow. I saw late on Friday a story. I'll give you guys the link here. It's from CNBC. I don't really read CNBC too much, but I found the story there. And it says, White House advisor Larry Kudlow says Fed should immediately cut rates. So I think that smells of desperation. These guys, I think, probably know a lot of things that we don't. They talk a lot to the bankers, the Fed insiders, and I think they must know something that we don't, that things are not as good as they seem. Let's have a look. Low blood pressure. Hi, how are you? You're in Texas. That's good. I was watching today a little bit of golf from Texas, and it was almost 0 degrees. It was very cold there. I think it was in Austin. It's pretty cold here today as well. Yesterday was warm. Today was cold. You want to? Oh, Billy. Billy, say hello. Come on. Say hello to everyone. That's it. There you go, Richard. Hopefully you could see Billy. Yeah, Gilets Jaunes. I think they're on week Act 20 was yesterday. They're still protesting. Yeah, Larry Kudlow is a twit. I agree. But I think actually this headline shows a bit of desperation. So I think it's quite interesting. Yeah, Billy doesn't really know that we're doing a live stream, I guess, so he doesn't care. Billy, Billy doesn't like wearing anything, so we bought him little, coats for the winter. If you put it on, he hates it, so he doesn't need it. He has a nice coat. Shih Tzus are actually originally from Tibet, up in the mountains, so they don't feel the cold. I've got here the Economist, which some of you know I've subscribed to. This week's it says The Silly Isles. It's about Brexit after May. And I heard a good joke. It's going to be the first time in the UK that the end of May will come before the end of April. So that's the situation. Nobody really knows what's going on with Brexit. Lord Humongous, how is Basel III and Brexit affecting everything, Mara? Well, the Basel III story, I made a video which got quite a few views for me, about over 10,000, where I called the BIS and asked about, today's date, or, March 29th or the end of March. And what it will mean for gold. And the lady at the press office said nothing. But I was listening again today, just before I started the live stream. I listened to King World News. He interviewed, what's his name again? Andrew Maguire. He interviewed Andrew Maguire, and Andrew Maguire again mentioned Basel III. But I don't think we should put so much emphasis on Basel III. I think other countries, I was just reading about Russia. They're, of course, adding on to a lot of the gold positions that they have. Even Poland and Hungary, and Russia even added on to yuan positions. The problem about the yuan is that it's not convertible yet, so it's not a great reserve currency to hold. So I think people are going to move more and more into gold. And I think, unfortunately, the American leadership under Trump, under Obama, under anyone, they're shooting themselves in the foot by using the dollar as a weapon. And by that, I mean all the sanctions that they put on people and countries that don't play by their rules or don't play ball with them. And I think that's gonna hurt the dollar, continue to hurt the dollar. Right now, it's not huge, but I think it could have an impact on it. All central banks are on a gold buying frenzy, well, except probably the Fed or the Bank of England. I was reading an article here on Zero Hedge about that, why Russia is dumping dollars and buying gold at the fastest pace in decades. And it actually even mentioned that Macron, the French president, said that they should stop. He's aware of the dependency on the dollar and that they should try to stop being so dependent on the dollar, that it was a matter of sovereignty. JD, I thought they were keep rates the same for the rest of the year. Why is not? Well, JD, I think because there's something wrong, and he's panicking. They were supposed to actually hike rates, the Fed. If you go back to October, November, there's still like people like Goldman Sachs who are calling for four rate hikes this year, and then Trump came out, complained, and then the Fed backed down, stopped now, and now they're pushing. They think they can push the Fed around. So that's what's happening. There's a section in The Economist in the beginning. It says the world this week. So it's just little like summaries of what's happened. And I saw something interesting here, and it's called Moore's Law right here. It's not the normal Moore's Law of computing, but it says Donald Trump said he would nominate Stephen Moore to the board of the Federal Reserve. And it says Mr. Moore founded the Club for Growth, which backs politicians who pursue lower taxes and smaller government. He's a controversial choice, having called for the Fed to target commodity prices and described Jerome Powell, its chairman, as totally incompetent. He says he now regrets making the remark. But one thing I found interesting is this talk about targeting commodity prices. I think that means that he looks to debase the dollar versus commodities, because we know the CRB index is at very depressed levels still. So, and I think there's so much debt in the system that the only way to carry the debt now is to debase it, to make the dollar worth less. And they can't seem to be doing it, because all they do is pump up the bond market. They create a lot of debt for the financial system, but the real commodity inflation they're not getting. Hi, Jeff. Nice to see you. Richard, wouldn't you think that the rest of the world is getting tired of these American sanctions? Yeah, that's right, Richard. I think a lot of countries are. I think even Brazil was to some extent, but now the new president is very pro-American. So, but I agree with you. That's it's only making things worse. It's only speeding up the demise of the dollar, in my opinion. As the major reserve currency, the dollar will still be around, of course. Pablo, yeah, the Central Bank of Canada, I don't think has an ounce of gold, or maybe almost nothing. R. Sinclair, if central banks are in a gold buying frenzy, why is the price not rising? Well, because the price is controlled by the paper market. There's a lot of paper supply, It's highly manipulated, I would say. But there will come a time where they can't keep playing this game anymore. They did that in the 60s. It was called the London Gold Pool, and it came to a point where they couldn't hold it anymore. So they won't be able to do it forever. Yeah, I saw New Zealand cut their rates this week. That's right. Greenspan continues to say stagflation is unavoidable in America due to demographics, unfunded entitlement. I agree with him. Right now, I think the only reason interest rates, government bond rates are low is because the markets believe the central banks have their back. And why do I say that? Well, we need to go back to, I think, the summer of 2012 when Italian interest rates, if you guys remember the pigs, Portugal, Italy, Ireland, Greece, and Spain, their yields were going up to 7, 8. We could see the whole thing imploding. We could see interest rates rising, and then Mario Draghi, president of the ECB, came out and said, "We're going to do whatever it takes, to stop this." And since then, investors have had confidence that central banks can keep rates as low as they are. But I think they're going to find, it's not working because it keeps the financial system and Wall Street, City of London, and the bankers going, but the general public doesn't get any benefit. And that's why I think a guy like Stephen Moore, who Trump is nominated for the Federal Reserve, is talking about targeting commodity prices, because I think that would actually, put the money towards the people. They'd have QE for the people, I think. And that's what MMT is basically. It's not modern, it's nothing. It's just QE for the people. Do I think that's right? No. But I think politically that will be the only way out. Marine Stew, thank you for the super chat donation. He says, just a wee tip to say thanks for all the great content, Mario. Cheers. Oh, thank Marine Stew. That's nice of you. I don't know if you guys remember, I think it was sometime in January, I was having a live stream, and many of you told me that you didn't see any of the adverts in my videos. And that led me to looking at the settings. And I have to say, things have improved quite a bit in terms of revenue for me. So thank you for that. I know now you probably see a few more adverts, but you can always skip it. And I'm never going to charge for this service anyway. Chris Hughes, thank you for the super chat donation. He says, thanks for all your insights. Well, thank you, Chris. And thanks for everyone's interest. When I started doing these videos like late 2015, early 2016, I never thought I'd have almost 24,000 subscribers and that people would actually want to listen to me. But I'll just keep doing what I'm doing. Hopefully, we'll keep going. Simon Alta, real price of silver in today's USA dollar is $250 an ounce, if not suppressed. Well, yeah, I think a lot of prices are artificial. So are bond prices, which means that bond yields are completely fake. And one day everything is going to explode and the real prices will be found. It could be more than $250 for silver. It could, the 10-year yield could go up to 25%, 30%. It could go crazy, I think. So yeah, I agree with you there about silver prices. Yeah, Lord Humongous. Yeah, MMT is funny money, just like it. QE is funny money for the bankers. MMT would be funny money for the public. And money is just a representation of wealth. You can't create it out of thin air. That's what people don't get. My dad always used to say, money doesn't grow on trees. You have to earn it. The Fed is behind the Bitcoin move. That's from the Federal Reserve. I doubt that's really the Federal Reserve. They're watching me in the live stream. And the EU. Uh, Prospector Paul, hit the likes for Mario, please. Thanks, Prospector. Oh, there's another interesting article this week. And I have to say, I don't read The Whole Economist every week. A lot of it is fairly boring, but I saw something for people who are into cryptocurrencies. I've got some money in cryptocurrencies, and I think, I don't know if you guys know this, like sometimes you get Newsweek or a big magazine come out with a headline and the exact opposite happens, right? Uh, so this week, under finance and economics, the Economist says cryptocurrency, the madness of crowds, the flaws revealed by cryptocurrency must make a lasting revival unlikely. So this could be a big contrarian signal from the Economist for those who are interested in cryptocurrencies. They're saying that there's no scalability, but they only look at Bitcoin. They don't look at all the other, projects out there that are scalable, like EOS and some other ones. So that's what I wanted to point out. This is this week's Economist could be a contrarian indicator for cryptocurrencies. Let's see. Only my Pov. Kudlow is not an economist. I actually think he is. He is an economist. He trained as an economist, Larry Kudlow. Let's see. Not that I respect the guy or think he's any good, but let's see. He has Princeton University. What did he study? He was a chief economist at Bear Stearns in the 80s. But anyway, and I think he's saying that this is what Donald Trump wants, though. He said that Donald Trump wants the rate cuts immediately. Larry Kudlow is a coke addict. Well, I don't want to go into that. I'm just looking at the. I have heard stories about his past, but that's not my point here. S. Walker, near the end of the movie, the big truck, they tell us nothing was fixed. I agree, nothing was fixed. If you guys should watch Best Evidence, I highly recommend the YouTube channel. He should get more subscribers. That's John Titus. He covers all this really well. He said, the crisis of '08 was not to save the U.S. economy; it was to save Wall Street because, of all the derivatives, they lost billions and billions, or they would have been finished. So all the TARP bailout was not for troubled asset relief program. It was for Wall Street bailout. That's what it was for, and nothing's been done to fix it. I agree. The other thing as well, there's a documentary about the crisis of '08. I forgot the name of documentary, but there's Paulson at the New York Fed talking to all the Wall Street bankers, and he said that the West was FUBAR. I don't want to say the F word, but yeah, he said the West was finished. And that we're only gonna be buying time right now, and that's what we've been doing for the last 10, 11 years. Jocko Hughes. Well, Kudlow made a comment late on Friday that the Fed should start cutting rates now immediately. And that's like what Donald Trump wants. And I think that shows signs of desperation, in my opinion. That shows that there could be something not well with the U.S. economy. Or maybe not even the economy, but Wall Street, the financial system. Yield curve, Simon. Yeah, the yield curve has, in the last month, has shown signals of distress for the economy. I think on this week the 10-year dropped. The 3-month to the 10-year was 10 basis points inverted at one point. I think that disinverted a bit, but the last 7 recessions, every time there's been an inversion between the 3-month and the 10-year, there's been a recession. It's a signal of a recession. Of course, Janet Yellen and all the mainstream people are saying, oh, this time it's different. It doesn't mean we're going to get a recession. Lord Humongous, he's busy today. Designed that way. Best Evidence. Yeah, great channel. I really highly recommend Best Evidence. Yeah, cryptos have improved lately. I agree, Aaron. Daniel Glavin, are you recommending gold, silver, or both? Daniel, I've been, since I started my channel in 2015, I've been recommending both, but not for trading, but as insurance, as money, as savings. Yeah, physical gold and silver. I personally have started buying gold for the first time in 2002. And yeah, I recommend gold and silver. RWG says, I pray that folks are preparing for what's coming, job losses, businesses, and house foreclosures. Damn, too much debt. Yeah, it's really not great. It's not really nice at all because, the powers that be, the establishment, the Wall Street, City of London, they all try to paint this rosy picture, and people who don't look into these things like we do, they don't realize this. And small business owners, for example, they think, oh, the economy is doing great, let's hire more people in this, and then they get burnt. That's what happens. Yeah, I saw that article, Simon, on Zero Hedge. Interesting. Lord Humongous, best channel on YouTube. Thank you. That's nice. Martin Armstrong reported that the yield curve will shift back to flat in time. Well, of course it will, but in the meantime, it's inverted. It could shift back, but I think I worked in the bond market for over 20 years, and the drop in yields we've seen in the last month is worrying. It's quite big drop. But I think people are getting sick of this because they know that these low zero yields near zero or negative, they don't do any good. I mean, Europe has even lower rates, and the European economy, EU economy, is in worse shape than the US. So is Japan. So I think we need to be careful, and I think having physical gold and silver will protect versus a deflationary collapse or a hyperinflation, because the only way to write off the debt is getting too big, is to hyperinflate it or let it implode. And I think politicians prefer inflation. So I think either way, because when there's deflation, there's a lot of bankruptcies as well. So gold and silver do well because paper assets don't do well. And if you get hyperinflation, it's the same thing. Danny Djokovic, everyone's leaving New York and everyone's trying to sell. Nobody can afford to buy at a current. Yeah, I saw an article about Mac Mentions a week or two ago that a lot of people who are thinking of retiring and bought Mac Mentions like 20, 15 years ago, they're having to cut the prices because not only people don't have the money to buy it, they also don't like the huge, houses. Sash Media, 18-year cycle. I haven't. Why don't you send me a link? Put in one of the messages in my videos. Send me a link to where I can read about it. This live stream is going to be recorded, and then you can put a link there for me. What's in the name? If obtaining interest on the debt they create is the Fed's main business, how do they gain going negative interest rates? Seems like a bad business model. Yeah, it does. It is a bad business model, but it just shows desperation that they can't keep the system going. That's what the ECB and the Bank of Japan are doing. But they don't really care because they can create money out of thin air. They don't really have a business model. Their business model is that they're a monopoly that can print money out of thin air and no one else can. What happened to palladium this week? I haven't looked at palladium. Bowman, I'm sorry. Yeah, MJQ says MJQ bought gold and silver on the dip on Thursday. Yeah, I was surprised that gold rebounded fairly well on Friday. It even got up to 1300. Uh, Isabella Izato, OMG, what am I doing here? Lol. This live stream is mostly about markets and economics. So we're talking about Larry Kudlow, who's the Council of Economic Advisor for the Trump White House. He said that the Fed should cut rates immediately, and I think that is showing desperation, that there's something wrong with the system. Isabel says, "I'm Brazilian. Can I stay here?" Of course you can. I'm originally from Brazil as well, so Isabella. So just to let you know, Sophia, do I like Trump? No, I don't talk about politics that much here. I cover more the markets, economics. I look at economics in a contrarian way, an alternative way. I don't. I think Trump is just another. I don't think Trump is in charge. The Fed's in charge. The central banks are in charge. You see, that's why you need to end the Fed. Yeah, Aaron. Really need to do your homework about storing cryptos. Yeah, that's half the battle with cryptos, because if you don't store it properly, you can lose them. Crypto boner. Any other warning signs besides the yield curve? Well, I think the fact that also in Europe, the German 10-year yield, I think it was over a week ago. I think it was Friday, the previous week. We had some very weak manufacturing numbers in Germany, and the 10-year Bund yield went negative for the first time in 3 years, which is a really bad signal. But I saw today that we had some news out of China. Manufacturing PMI in China actually came out at 50.5, and it was forecast at 49.5. And non-manufacturing PMI for China came out at 54.8 versus 54.5. I don't know how much we can trust Chinese numbers, but they are better numbers. Richard, yeah, Billy's in charge. Savio, do you think the media affects the economy? Well, definitely, I do think it does. Um, but it's the management of perception economics, or MOPE. And I think a lot of the media, they, like even financial media, mainstream media, they try to play along, with the powers that be. They don't question things that much like we do in the alternative. So yeah, people read, headlines in papers, oh, inflation at uh, 30-year lows, that everything's fine, that the economy is growing. So yeah, they do affect it. It does change people's perception. But I think they can't do it forever, because people in the real world don't see a lot of that. And that's why people are getting more and more fed up with the mainstream. So let's see. Joko Hughes, what does a failure in the economy look like? I think, the failure is more of the monetary and financial and banking system. The economies of the world themselves, I think, are quite sound. They're human beings, there's infrastructure, there's educated people. Yeah, it's more of a financial problem. That's why I think if we can fix the finance and the monetary system, uh, there shouldn't be a problem. It's just a matter of having too much debt. Do I use technical analysis? Do I use any market oscillator? I use more like I look more at like formations, moving averages. I don't really look too much at oscillators and like MACD sometimes, but not that much. So I'll take a few more questions and then I'm going to call it a day because I think, when I do these live streams like for 30 minutes, it's better. When it drags on for too long, it's too much. So I'll take a few more questions from you guys here. Upper Darby, look at the Midwest of America. Yeah, I saw that Upper Darby. That I think 1 million acres are flooded. That as that could be something very important for the price of commodities, especially wheat and corn. Although we need to keep an eye on that. I have been reading about that in the last week, but for now it looks like the commodity markets haven't reacted that much. But I will keep an eye on the CRB. Isabel, it says in Brazil, we need a president that knows about the economy. Um, I think we need a president that people don't know the president. I think people put too much importance on politicians. I think the less politicians do, like in Switzerland, I lived in Switzerland many years ago. People in Switzerland don't even know who the president is. So yeah, I think we need presidents and politicians that stay away from things and let the general public run things. We need small government. So yeah, I don't agree with that. I think the best thing for the economy is to leave it alone. Hopefully, that's what I think. Uh, Time will tell. Did you see Warren Buffett's recent interview? I think someone sent me a link to that. I haven't looked at it. I will have a look. Oh, thank you, Lord Humongous. Uh, you're welcome. Okay, April Fool's Day tomorrow. That's right. Yeah, 1st of April. We put our clocks went forward here overnight, so we're back to being 5 hours ahead of the Eastern Daylight Time. So I'm gonna call it a day here. I'd like to thank everyone for showing up. 233 is not bad for following my live stream. Any of you who are new to the channel, if you enjoy the live stream, think about subscribing. I make a video every day about the markets and economics and other things. And yeah, I wish you all a great week next week. And I'll talk to you later. Take care. Bye.